Industry experts predict a rise in the likelihood of the SEC and approving a spot-based Bitcoin exchange-traded fund following the approval of America's first Ethereum future ETF. This confidence is bolstered by the recent approval of America's first ETF. Crypto trader Alex Kruger predicts a 70% chance of spot Bitcoin ETF approval in Jan, stating that it is tradable. He compared crypto traders to selling the news professionals, stating that selling the news requires front-running. ETF Store President Nate Geracki emphasized the launch of Ether Futures ETF despite the anticipated approval of spot ETFs in the near future. Crypto Robo and Bitcoin therapists predict that the SEC will be forced to accept a spot Bitcoin ETF after Ripple's partial victory against the SEC. They believe the SEC will continue to use the crypto fraud scapegoat, but the approval of the ETF is expected to generate trillions of dollars. Former BlackRock director claims SEC will approve spot Bitcoin ETF within 3 to 6 months with potential capital inflow of up to $200 billion. Bloomberg ETF expert Eric Balchunas announced that the SEC's appeal deadline is October 13 and spot filings are expected to be delayed until January 3. Despite a crypto bear market, recent approvals and ETF launches of Ether Futures have increased institutional investors' interest in Ethereum, the second largest cryptocurrency by market cap. On October 2, Ether Futures began officially trading 6 financial products with net expense ratios. These include Bitwise Ethereum Strategy ETF, Bitwise Bitcoin and Ether Equal Weight Strategy ETF, ProShares Other Strategy ETF, ProShares Bitcoin and Ether Equal Weight Strategy ETF, Bitcoin and Ether Market Cap Weight Strategy ETF, and VanEck Ethereum Strategy ETF. James Butterfield, head of research at CoinShares Co., reported a $13 million institutional inflow in Ethereum products by October 4, marking the first net positive week in a 7-week run. This inflow is less than $200 million for Bitcoin during ProShares Bitcoin Futures ETF launch in 2021, attributed to the current bearish market cycle rather than the Eurofic bull market. Institutional investors are still experiencing a bear market with 24 weeks of net negative flows out of 39 weeks total since 2022, according to CoinShares data. Ethereum saw a $101 million outflow year-to-date, while Bitcoin had a $219 million inflow. However, weekly and month-to-date flows for both assets were similar, with $16.4 million and $12.9 million inflows, respectively. Introduced in January, ordinals experienced moderate growth but have since exploded, with nearly 35 million inscriptions minted until September, according to Galaxy Research, a blockchain analytics firm. Bitcoin ordinals, despite being primarily fueled by digital artifacts or image-based files, saw a faster growth in its early stages when focusing on image-based inscriptions. During its first 200 days of activity, Bitcoin minted around 1.14 million digital artifacts compared to Ethereum and Solana, which experienced slower minting activity since the debut of NFTs. Ordinals experienced significant growth during the NFT crypto winter, according to Galaxy Research. Despite the bear market, ordinals gained traction and the concept of digital artifact on Bitcoin. NFT trade volume dropped significantly in 2023, with ordinals accounting for 18% of all NFT volumes in May. Despite dropping out of the spotlight, ordinals contributed significantly to Bitcoin's NFT activity. Bitcoin became a popular spot for trading digital artwork, with the third highest NFT trading volume in Q1 2023, surpassing major players like Polygon, Matic. Ordinals frenzy also increased network activity, peaking in May due to the bulk minting of BRC20 tokens. Ethereum and Solana trailed behind. In the upcoming segment, we will update you about the following news. Blockchain finance to grow into $79.3 billion market by 2032. Stellar PwC published framework to judge emerging market blockchain projects. HKEX to launch smart contract settlement platform. Stay tuned for more updates.